Everybody, it is the 1st of December. We are Signal Centre Talking Ball. I'm Joe Neighbour, and behind number one on the Advent calendar today is Steve O'Hare.
I like it, Joe.
Good, eh?
Look at that. Did you?
That was right off the cuff as well, that was.
Well, I'll tell you what, I'm really impressed by that. Behind number one. I don't think we
He
have.
is
We
number
know.
one.
Have we got 25 people we know that we could run up to Christmas? Probably
I don't
not.
know 25 people. Maybe between us we do.
I doubt it. Not 25 people that are like us or anything. So that might
Yeah,
be a bit tricky.
could be.
Interesting.
Like to get some random guests on, some viewers maybe.
Yeah.
I don't even know if we've got 25 of them, have we?
No, don't think so. No,
Maybe over the history of the videos.
Yeah, we're not interesting enough.
Well, we try our best anyway, but let's get stuck into some headlines. Another volatile session yesterday. Germany in the news this morning because they're taking another step closer towards making COVID-19 vaccines compulsory as the incoming Chancellor called for a parliamentary vote by year end on this. For now, a decision on additional restrictions for the unvaccinated is expected tomorrow. As a result of similar sort of action, we have seen quite a few demonstrations and protests about this. The South African doctor who helped identify the Omicron variant has also warned that it's too early to write off new cases as being mild, as symptoms may worsen in the second week. And also the variant hasn't reached a large enough sample of people yet. In terms of what's going on with the Federal Reserve, it was quite a big day yesterday as well. We had a Jerome Powell on the wires. He put a clear sign in that the Fed is shifting to a tighter monetary policy. He spent months arguing that the pandemic surge in inflation was largely due to transitory forces, saying that it was temporary. But yesterday he told Congress that that's probably a good time to retire the word transitory, and therefore we can probably expect some action, probably some tightening quite quickly, maybe. And possibly before the end of the year. We've got the next Fed meeting on the 15th of December. In terms of what's going on with the Turkish lira, obviously that's been in the news as well. It fell to a record low again yesterday after President Erdogan said interest rates will continue to fall and slow inflation, which is currently running at 4 times the official target of 4%. So massive inflation figures over in Turkey. In terms of the overnight price action, the Asian markets were largely positive. The Hang Seng was leading the way. BioNTech CEO gave a more positive view on vaccines than his counterpart at Moderna a couple of days ago. And that comes into stark contrast to yesterday's US close. So despite there being a bit of an uplift yesterday, overnight in prices, there was quite a bit of volatility during the session, obviously as a result of what Jerome Powell had to say, which we'll come on to shortly. Steve, let's get stuck into some charts. Is there anything that's particularly catching your eye today or over the last 24 hours that you want to start with today?
A little bit of frustration on my part because I'm short of DAX still, and it's just not breaking down.
Right.
I feel like it could be something that may take a lot longer than my time frame. So it's just a bit frustrating. But anyway, let's dive into crude oil energy markets and take a look at the WTI crude oil to start with. Looking at the weekly chart, we've shown this chart for quite a while now. We've topped out at around $85, and we've seen negative price action. We've seen that this is the 6th week of negative price action, and we've run into this previous resistance, now turned into support. It's a $5 range between 61.50 and 66.50, and we poked our head into that yesterday and have reacted higher from here. So a little bit of slowing down in the sell-off. Looking at the daily chart, we're below the 50-day moving average quite nicely. It's proved it's capped price action with this resistance after breaking through and the projection lower. 78.6% fib. We're trading just above there now, but we are seeing a small correction where the indices as well have sort of like corrected higher. So price action We've got all inventories out later. This is the 4-hour chart. We've got a bearish channel. We've broken aggressively lower than this bearish channel. We've got a crossover on the MACD on the 4-hour chart. So maybe a little bit of consolidation up towards the $72.60 to $73 level would act as resistance, but it's still a way off. That's like $4 away. So it's not a big correction at the moment. You can see even the momentum of this correction has slowed down, and even sort of like to get above $69 could be a task for crude oil today with this volatility out later on the oil inventories. Brent crude looks a little bit perkier. It formed a bullish hammer, a nice reversal, still potential for further upside. And again, we'll run into resistance around about the $75 to $76 level, crossover on the MACD on the 4-hour chart. So looking pretty good there. Now, the one part of the energy sector which has proved continues to look a little bit shaky is natural gas. Obviously, we've had a really incredible up move since April. What percentage is that? That is 161. Oh, nice Fibonacci number. Percent uplift from the lows of $2.50, and it's the volatility has been spiking quite aggressively, but we've now on the daily chart we found a cap around about the $5.50 mark. The support, this sort of descending triangle type formation, only had 2 lines, so it's not a clear-cut one, but the support was clear around about $4.75. We've broken through it aggressively, and it looks like we're heading towards this area around about the 61.8 fib retracement, which would be a natural magnet to it, I think.
That gap down's incredible.
Yeah.
The one where you got the big green candle up to the underside of the moving average, and then the next open was through the floor.
Yeah, that was over the weekend with the Omicron. Yeah, and we saw the indices. It wasn't quite as aggressive as that, but the oil definitely took a big hit. That's a big old gap. I mean, if you look at it from a daily perspective, you wouldn't actually say it's a gap, but it's a gap from the close, definitely. So yeah, on Friday, you'd have been looking at this thinking, oh, it's back up to the 50-day. Yeah, it's back up to the 50-day moving average. Nice reversal. Then bang, right back down to the support and through it like a knife through butter. But yeah, $4 for me feels like a natural target for natural gas. I said that in the video earlier. It doesn't sound like the right sentence to say, but it's a natural target for natural gas. Let's get rid of this channel here. On the, I'll stick to the daily chart on gold as well. So we have had this move up to 1875 resistance, reversed really nicely and aggressively back through the 1834, which was a key resistance level, and didn't act as support on the way back down, just went straight through it. But again, we're hanging around, ranging between 1815 and 1780 at the moment. Although we've been down to 1770 yesterday. 1750 to 55 is the next support, but 1722 for me is key. Below that, we got 1676. So with the dollar still relatively strong, gold remains a little bit pressured by that dollar strength. And I still feel that this 1677 has a part to play in the future. If we manage to not retest the 1750-55 and bounce from here, it would look pretty constructive, but we've got this sort of triangle formation forming. So a break either way of that should lead to a nice trend. Cryptos stalled a little bit over the it's found sort of like, again, the 50-day moving average seems to be capping it, but really 59,500 for me is key resistance. If we don't manage to break above there, then it opens up the downside. However, it's sort of like, it looks quite constructive, this price action, a little bit like an inverse head and shoulders formation on this move here. So that's why I think if we do get a break, a clear break of 60,000 and a close above there on a major time frame, maybe a daily, maybe a weekly even, then it will open up a positive sprint to the upside. Until then, until we get that break and close above there, pressure remains on the downside. I mean, we've got this bearish channel. Could we draw it really? That looks quite nice.
Crossover on the MACD.
Crossover and the MACD are on the upside, so that's nice as well. So it's always nice. I like to see the crossovers when we're on the downside, below in bearish momentum territory, but you don't get them often. It's always a little bit flaky, but it does look a little bit toppy on a short-term basis. Maybe the hourly chart will give us another head and shoulders formation, probably double top.
We tried to buy that yesterday on the intraday idea for a break. And as you can see, you got what's that? You got the so it had a little bit of a look, but then failed.
Yeah, exactly. So that level here is key. Obviously, you know how sort of volatile that market is. It can easily take you out, get you into the trade, buying a break. But you know they can be quite risky in the highly volatile markets. But when they do work, they work very well. But yeah, for me, head and shoulders, double top type formation. So if we get a break of 56,000 to the downside, and a close below there on one of the shorter term major time frames, like an hour or 4 hour, then I'd be more inclined to look out for the target down to 53,500. I mean, that's my view at the moment, that the indices should be heading lower. I think they will, but it might take a bit of time, and this choppy trading is enough to knock people out in the meantime. On the Ftse, a little bit of a recovery overnight in Ftse, 2 negative days after the doji candle. Sorry, this is a weekly chart. So we've had a decent week. We've reacted from this previous resistance level at 69.60, has acted as support, and we've seen a nice projection higher. However, yesterday's price action didn't look so nice. At one point, we saw this move down towards that support level. Reacted really nicely from there. I think we sort of did okay on the DAX. We had one of our analysts looking to buy a dip on there on the intraday trade idea, which worked really nicely. Didn't quite hit the target and came all the way back, but still ended up in positive territory at 9 o'clock. So yeah, we keep getting these dips, but dips continue to get bought. I think if we're looking at this 50% levels on most of the daily candles that we saw Friday, the really negative sessions, if we get back above the 50%, then it's more constructive for the indices. On the US side of things, bearish and well, almost a bearish outside candle, bearish engulfing candle, completely engulf the previous days or Monday's price action, and we're still below there. So Dow still a little bit under pressure. Is that just sort of like getting ready for them to wake up in the afternoon and then project higher? Nasdaq hasn't had as much impact on the Nasdaq, the tech sector. Obviously, that sector did very well, outperformed really against all the other indices. Not as much affected. In fact, benefited if you're looking at the technology stocks during lockdown. So that's definitely a sort of like a spread to think about. S&P's has had a little bit of a pullback higher overnight, so it looks slightly more positive.
Funny looking at those candles to the left of this sort of recent phase of volatility. Just nothingy candles, and all of a sudden you've got these big ranges.
Well, if you think about it, this Friday price action took out, you know, almost 3 or 4 weeks of price action just in that one fell swoop.
Upstairs down the elevator, as they say.
Yeah. And so for me, we've had this impulsive move higher, correction lower, ABC potentially could be looking for a deeper correction. 50-day moving average on S&P hasn't been tested yet.
Lines up nicely with that previous high from
right back
October,
here.
is it?
Yeah. So
and the 38.2 fib is that as well.
Yeah, nice one. There we go. 38.2 fib coming in at 4,563, 4,550 would be the previous swing high at one point was an all-time high, obviously, before the correction and the extension higher.
So
So
you
if you
think that's
look
a
at
bit
it,
of a pivot level, maybe, if that goes, then
it
because that
feels
would be a
like
sort
it.
of natural buy the dip point, wouldn't it?
Yeah, because this feels like a bit of a vacuum. This was such an aggressive and quick, fast move up. You tend to get a vacuum there, so that the price action will take as much time to go back through it. When you get constructive candles like this and a slow grind higher,
There's also
uh,
lots of participation in there as well. Whereas,
yeah,
on that move up, it sort of just happens so quick. There's nothing in between, is there really?
exactly. And so volume would have been pretty light as well. We always look at volume as well from a technical perspective. It's good to understand, what's going on in that sort of like move. If it's been a big high volume move, there's been a sort of change of sentiment from one of the sort of participants within the market, the major participants, whether you get the sort of like the banks, the sort of funds, or even the major participants are sort of like retail traders. They sort of like end up seemingly getting caught at the top and the bottom most of the time. But yeah, definitely something to consider. Aussie 200 still a little bit under pressure, and again, we've got supportive levels which aren't far away. It feels to me like this week is going to be bobbing along until maybe Friday again, and we might get that aggression on Friday, and people will be thinking, I don't want to hold my long positions into the weekend, just in case there's some horrible news that comes out. So that's where I sort of like think the Friday will be the key day for us this week, and I guarantee I won't be short of DAX by that time, because it never works as easy as that. China 50 still got my eye on the 14,500 level, trading sideways really, 15,350. Hang Seng under pressure was making its way down towards the 23,000 support level, stalled and reacted higher. But again, this morning, overnight, it's moved higher, failed, and it's starting to move lower now. So who knows? We're back down testing this descending triangle, so reverse trend line, and it's bounced off there on the Nikkei as well. Yeah, that's about it.
That's lovely. Well done, Steve. Okay, let's have a look at FX. So first up, dollar index. Bit of a wild session really yesterday. So overall, still trading in this bullish channel, back in the bullish channel. Yesterday's candle, though, quite a picture really. We saw a big move to the upside, which failed, and prior to that, we did see quite a move to the downside. So what we have here is a bearish outside day. Engulfed all of pretty much yesterday's price action as well in the process. A little bit of a push higher today. I guess if we drill into the sort of intraday price action of dollar index, we can see that we had this slide down and then this massive candle to the upside, which I think came on the back of the Jerome Powell chat about inflation not being transitory anymore and retiring that word. And as a result, we saw a big push higher in dollar index, but then it all sort of gave that back really. So back where we started, overall, I still think we look pretty bullish on that. So Euro USD, I was of the opinion that maybe we'd see a bounce in that. Overall, we did see a positive day, but on the intraday gun to the head idea that I did on that one was looking really nice, a nice little breakout from an inverse head and shoulders pattern on the hourly, only to be absolutely ruined by the by Jerome Powell. So this was what we was looking at intraday. Head and shoulders, nice breakout. We bought here. It was going really nicely. There's 1 hour on side, and then bang. See you later, Joe. Your day's done. So that's the
Nasty
way it
man.
goes, unfortunately. I'd be very surprised if you got out at the stop there as well, based on that candle. It probably would have taken a few extra pips off of you.
Definitely,
But
Joe. I've realised I've got another caller, but I'll leave my trade of the day or gun to head trade with you as well.
all right, okay, and I'll try and make some sense of that. Thank you,
All
Steve.
right, cheers.
Okay, so going over FX again. So cable yesterday broke out of the channel to the downside on an intraday basis, but closed back within it, posting a hammer type candle. Still no real sort of follow through on that today. Very flat in terms of price action so far. If you look on the right hand side of my screen, you'll see the Aussie currencies are in a lot of green. So we did see the overnight data from the Australian GDP shrink less than expected, which was bullish for the Australian dollar. And obviously, in general, we are seeing more of an appetite for risk this morning in assets. So things like Aussie are having a nice little bounce. So yesterday, we saw a breach of this key support that we spoke about yesterday at 71.06, posted a bit of a hammer candle, posting some green today to back that up. We are still trapped within this short-term bearish channel, but if we can get a break out of that, then we may see a bit of a continuation higher. So yesterday we were talking about, from a risk reward perspective, we've got a really nice reference for support for a stop on Aussie USD, although it is speculative and certainly counter trend. While down at these levels, this is very close to the point where you're going to be proved wrong on the trade. So we did see a little bit of a flush out. Arguably, that's taken out a few stop losses before then reversing. So now you've got a little bit of additional confirmation. You could be looking to buy that with a stop below that low, targeting a move up to potentially these highs up here at 75.53. Also, if we look at New Zealand dollar, US dollar, again, bouncing today as a result of the improved appetite for risk. Again, another good reference for a stop loss here. Yesterday posting a bit of a doji, although we flushed out probably some stops below here. We're posting some green today, so maybe we could see a rise in the short term. Again, speculative and very much counter trend, but quite interesting nonetheless. If you do think we are going to recover from here, if Omicron isn't going to be as bad as expected, then maybe looking for some riskier assets would be the way to go in the short term. Okay, let's have a look at sterling, euro sterling. That continues to bounce from the lows that we posted last week. We posted a decent looking green candle yesterday, so there appears to be more appetite for euro over sterling at the moment in terms of euro being looked at as a bit of a safe haven, strangely enough, against sterling. Bit of red today, but certainly not much. So plenty to come on, or plenty of opportunity for that to change throughout the trading session today. Okay, that's pretty much it on the FX front. So just having a quick look at the gun to the head trades from yesterday. So as I mentioned, I got stopped out on that Euro US dollar trade, and Steve went short of the Ftse and he got a stop out too. So 2 stop outs yesterday, which obviously isn't ideal. Steve has sent me through his trade idea for today. Looks to be an index. I think it is DAX. Let me just check the prices on my chart to confirm that. So he's selling at 15,273. So let's just have a look at the intraday price action to try and mimic what he's done, and I will. He's obviously looking there for a continuation lower, given that there has been a move lower, maybe a bit of consolidation going on at the moment, and Steve is expecting lower prices. He is selling today at 15,273. He's got a target on the downside at 15,033, and he's got a stop loss at 15,333. So he's looking for 4 to 1 on that one. So selling here, he's got a really tight stop above the most recent high that we've seen at 6 o'clock this morning. Also quite like the fact that the stop is slightly above this big impulsive candle here as well. So best of luck to Steve on that one. He's looking for a move down into this sort of cluster of support down here, and looking for a 4 to 1 outcome today. So what am I going to do today? Good question. Not sure. So let's have a quick flick through some charts and see what's going on. I talked about this Aussie US dollar one, which was quite interesting. So maybe I should put my money where my mouth is on that one. So this was the setup. This is the daily chart. We're trading in a bearish channel. So while trading in a bearish channel, you would expect lower prices. But given that we've got this really important support level here that's doing a pretty good job, we could potentially see a break to the upside. In order for this trade to work, I am looking for a boost in risk sentiment. So that may be something that comes out today in the form of the data that's due out, or whether we hear anything fresh with regards to the new variant of COVID-19. So let's have a speculative look at this. Obviously, all these intraday ideas are speculative in nature. I'm going to buy at the current price of 71.47. I'm going to put a stop loss below the low that we posted at 4 o'clock yesterday. So that's an 87 pip stop, quite wide typically for an intraday trade. but looking for a fairly decent move to the upside. I'm going to have to target something up here at 73.68 in order to make the risk reward look quite favorable. So that's a 2.5 risk reward ratio, looking to target these previous highs up here prior to the most recent sell-off. So let's see how that goes today. In terms of data that's due out, we have 1:15 US ADP employment report, 480,000 jobs expected to have been created from the 571,000 in the previous month. At 3 p.m. we've got the US ISM manufacturing PMI. The index is expected to rise to 61. And then at 3:30, as Steve alluded to earlier, we have the US EIA crude inventories number. Previous week saw stockpiles rise by 1 million barrels. So let's keep an eye out for that later today. Obviously, keep an eye on anything linked to US indices and US dollar crosses, and of course the oil majors and the oil price come 3:30. Okay, that's it from us. We'll be back tomorrow morning. Until then, everybody trade safe and goodbye.